welcome to The Trade. Before we get to the charts that matter, let's have a quick look at what traders are watching out there. A US judge temporarily blocking part of President Trump's sweeping directive to pause federal grants, loans and other financial aid. Meanwhile, the FDA has approved Novo Nordisk's Ozempic for reducing the risk of kidney failure and disease progression, as well as death due to heart problems in diabetes patients with chronic kidney disease. Starbucks has reported a smaller than expected fall in first quarter comparable sales, in early signs that the struggling coffee chain is benefiting from CEO Brian Niccol's efforts to revive demand. Meanwhile, HSBC planning to wind down its M&A and some equities businesses in Europe and the Americas, accelerating a shift to Asia in its biggest retrenchment from investment banking in decades. And Saudi Arabia's energy minister, plus several of his OPEC Plus counterparts, have held talks following President Trump's call for lower oil prices and ahead of a meeting next week. Let's get into the technicals now with Jonathan Tacadena from MPC Markets, who joins me in studio. Good to see you, Jonathan. And Gong Shi Fat Chai, Happy New Year, Lunar New Year. Now, we are looking very closely at the implications here between China and the US, particularly with the DeepSeek disruption. What are we seeing in terms of, I guess, the advantage China is sort of getting in a lot of these spaces?
Yeah, well, that's the whole thing I want to talk about here is that, Chinese New Year, and we've had a really, really big start to the year in terms of markets. Obviously, China has just dominated industry. So what they just traditionally do is that they just reduce margins on everything and just take market share on a lot of industries. And I'll have a graphic there showing that they dominate solar, all the solar panels, EVs.
So the critical minerals they're dominating, definitely.
So critical minerals. So that's just the industries there.
Yeah.
So they're the sort of consumer industries that they dominate. So obviously, if you want solar panels, electric vehicles, lithium batteries, and the big one there is polysilicon. So they don't actually have the technology right now to compete with NVIDIA, but what they do is they actually supply 92% of the products to NVIDIA for them to manufacture. So they control the whole, pretty much the supply chain. Just that little tip at the end where with the high-end manufacturing, they're coming after that as well. So it just shows China's dominant position in manufacturing. And what we've seen just today as well, so DeepSeek came out last week. Alibaba came out this morning and said that they have another AI model, which is on par with OpenAI. It actually beats it as well and uses less energy. So what China has just shown this week, and the market's sort of reacting to it right now, is, hey, we manufacture everything, but guess what? We do software as well.
So what does this mean more broadly in terms of the adoption and acceleration of AI? Shouldn't more competition be seen as a good thing?
Oh, yeah, absolutely. So if you invested in the Mag 7, which dominates the whole industry, that's basically everyone's sort of piled into that thematic, thinking that the only way to actually win in AI is just to have brute force, have the most chips. And what China have done is said, no, you don't actually have to do that. What if we come up with something a little bit smarter? So what's happened here is that US has gone down the route of hardware. We're just going to have the most chips, the best chips, and the most amount. And that's the mean that came there. So basically, in the past Olympics, obviously they're both gold medalists. One had used all the trickery and fancy things, and obviously the gentleman from Turkey came in just with a pair of glasses and just shot the lights out and got the gold medal. So that's what's actually happened here in AI. So what China have come out is with software, they've just beaten hardware in one fell swoop. And what happens now is that OpenAI has raised $18 billion over the years. The Mag 7 have committed hundreds of billions of dollars. Trump came out with forget the name of the... Stargate, yeah. $500 billion that they were going to invest into AI infrastructure. That's just been, now they have to go back to the drawing board and go, what do we do now?
Well, are all things created equal? I mean, I heard one analyst, and I should give credit because I've mentioned it a couple of times now, Dan Ives from Wedbush, saying that this is actually the Temu of AI.
Yeah, but the thing is, that model does work.
Still works.
Yeah, so if you were to go to Bunnings, like basically... you can buy the high-end drills that are made in Germany and Japan and all the power tools, or you can get the Chinese one, which is half the price and does the job. And that's their model. So that they've come and done the same thing within AI. And that's what's blown a lot of people away, is that okay, they've done it in manufacturing. Now they're doing it in software as well, and that's the game changer, I find.
So what does that then mean in the broader supply chain, particularly with China's dominance?
Okay, so in the supply chains, not too sure what happens there, but just in basically making AI affordable for everybody now, that just changes the game. So anyone that's using AI, like we were, obviously we're trying to incorporate some AI within our own practices, and Kyle was looking at some of the things we want to do, and he was like, it's going to cost us maybe $8 a query, and then with the amount of queries we're doing, we just don't have the resources. But now that you can do the same thing for 50 cents, you're like, hey, that changes the game right there. So, that just makes it accessible for everyone now, and it just levels the playing field. So there's just going to be so many more pockets of innovation. You're going to see just more people that have access to the AI models now just pop up and really, really create and really innovate.
So in terms of the share price reaction, and when we look at what we saw with some of the data centres, the likes of DigiCo, also Goodman Group yesterday, was that an overreaction? Is there still some upside?
Yeah, that's a tough one to answer, because what this shows is that they probably won't need as much, but then because it's more affordable now, the demand could go higher as well. So what I think will happen is that the margins will compress. Okay, so all these overvaluations will probably take a long time to sort of justify themselves. So we might see a bit of a pullback in the share prices going forward. But I think that because the prices drop, it'll increase demand, and I think it'll stabilize at some point there. Because obviously, AI will be the future, and it'll be just like the internet bust back in 2000. A lot of those valuations took a long time, but we did see new innovative companies come out and use that technology.
Yeah, and Sean Hickman from Market Matters made a really good point to, I can't remember if it was Drew or Nadine yesterday, but basically saying, when the smartphones first came out, you thought that the BlackBerry or whatever was the key model there, and now it's the Apple iPhone. So just some of these companies, I guess, change in terms of market dominance, in terms of what we're looking at. We shouldn't write off some of the smaller players.
Oh, absolutely. And as I said, so now that the level, the playing field is being leveled, it's just who's going to innovate and who comes to market the fastest now.
All right, Jonathan, some really cute charts there. Thank you. Some memes, we might call them. Jonathan Tacadena there from MPC Markets. That does it for this edition of The Trade. Be sure to join us again next time.